Hello everyone, let's do some research on Boost Run, the stock. Hey, somebody saying insanely undervalued AOSL. Let's check out what that is. Well, it's down 5% in a day. Yeah, I think they just posted their earnings or something. Okay, so we are live. The audio is working, thankfully. Well, let's just see. So this is the ticker BRUN, Boost Run Incorporated. It's a data center play, just like Nebius. And yeah, I decided to analyze the stock. So I just seeing that DG Power X hits profitability, which is very good news for the stock. But today I'm just analyzing B-Run, Boost Run, as I think it's a promising ticker. I just bought today at 27-ish, 27.40. So I'm already up a couple percentage points. And I just discovered the stock this morning when I just woke up. I checked the X timeline. People talked about B-Run as a new data center play, mimicking Nebius. And I thought it was worth checking the stock out. So I immediately did the research from my bed. And yeah, I got really excited. I read a couple presentations. It's a spec company, or it went it went through with their public offering through a spec instrument. But right now it's just trading like a normal ticker. Um, yeah, so let's go back to X and read about BRUN. So I also wanted to do another thing actually, and that's to switch to the live stream screen. So right now you're seeing the ticker on the screen on TradingView. We can see that BRUN, Boost Run, the company, started trading on Friday, May 8th. It started trading at $18, which was up from $10 at IPO price, which is not bad. Then it reached a high of 23, crashed back down to fill a gap, I suppose, to 16, and then it just started to sort of gap up every day. And today we are trading at almost $30 for Boost Run per share. So I think that's promising. And you know, as far as valuation wise, there's a debate going on. I mean, if we believe their revenue numbers and if we like are sure if Boost Run can materialize their contracts into real booked revenue in the coming years, then the numbers look cheap compared to Nebius or other new hyperscalers. So it's an interesting comparison to make. You know, Boostron, I will not be doing a stock analysis because there's not really much to analyze. I mean, I see that the ticker is trading inside of this upward channel. As far as technical analysis, that's the only thing that I see. And yeah, it's trading in an ascending wedge, but that doesn't mean anything because other stocks like AST Space Mobile, ASTS, they were also trading in the ascending wedge before they started their impulse wave and broke out of the wedge in a vertical fashion. ASTS like when it was trading at $20, was trading in ascending wedge, and then it broke out and started trading at 38, $40. And I see Boost Run doing the same, but then touch 58 and consolidate from there, maybe decline a little bit to 40. So yeah, right now I see Boost Run gain share price in the coming weeks, but that's everything in terms of technical analysis. Right now, I just want to look at some investor decks to figure out what the valuation is today and whether you are paying a fair price for Boostron compared to other hyperscalers like Nebius. And the thing is, Boostron, not really a lot of people know the company itself. This is their website. It's really basic, website actually. Uh, this is the management team, ex-Dell people, I think, Microsoft people. So the board is pretty advanced. I mean, in terms of running a data center play like Boostron does, their management team is, pretty stable. There are ex top 500 company employees, so that's always good. So what does the company do? They build purpose-built cloud infrastructure models for enterprise AI and high-performance computing workloads, GPU compute, CPU nodes, managed Kubernetes, and shared storage in an environment that's secure, certified, and scalable, which are the three pillars of cloud computing. So that's always good. But the differentiator is that Boostron has achieved NVIDIA Elite status, which means, I mean NVIDIA Exemplar Cloud status on the Blackwell architecture, which means that they hit certain criteria that their competitors could not hit. Just like Palantir hit I think, the government like classification level 5 or something, where a lot of other cyber security or AI companies were stuck at level 4. So that expands the opportunity in terms of contracts they were able to receive and also theoretically into the future. With Boost Run, they hit the NVIDIA Example Cloud status, which means they can actually, I think they can run the Blackwell architecture in their data centers. And if supply is already constrained, I mean, yeah, a lot of company they book the newest NVIDIA chips, but still there is a constraint on the actual running of the systems in data centers, in like actual data centers themselves, not only on paper but from architecture and runtime viewpoint itself. There's just a constraint on real AI processing right now because every company on earth wants to book the newest NVIDIA chips and actually run their programs on it. So I think Boostron is positioned in a spectacular uh, position, or they find themselves in a sea of opportunities in 2026, going into 2030 actually. So yeah, the only thing that I dislike about the website is that it looks a little bit vibe coded. If I'm honest and pretty blunt about it, but yeah, the website just looks like a very regular website. There's nothing much to it, but of course, it all runs down to their architecture stack. So let's look at some company presentations, and of course at X, at what people post about X. So yeah. Yeah, well, I don't know if it is, to be honest. Yeah, I have no clue what this account is. But anyway, B car. He asks about B car, whether this account has checked out that ticker. And B car is a smaller like company in terms of revenue and market cap than I mean B car is a spec that takes over Exascale eventually. And Exascale is just another company like Boost Run, but they are at an even earlier milestone right now than Boost Run is. Um, well, their website looks a little bit different than Boost Run, and they basically do the same thing, but Boost Run has another revenue model where their margins can grow larger than the margins of Nebius and Exascale theoretically. I mean, they yet have to prove their financials in the coming years to come. So that is still to be proven, of course. But if we look at the presentation of Exascale in terms of what they're saying or presenting to the world, is that every quarter their revenue or yeah, the revenue growth since Q4 2023 was able to grow 64% QOQ. So, which is a huge number. I mean, that's over 150, percentage points CAGR a year from 2023. So, with this growth already baked into the company itself, but not yet into the share price, I'm pretty excited about the IPO and how BCAR, the ticker for Exascale, is going to trade once the IPO goes through and the deal goes through and people start trading the actual stock in terms of supply and demand, because right now it's stuck at 10 or $11 at NAV. So yeah, I'm very excited about that. And they have been accelerating the revenue with built-in expansion, let's say. So gas, that's yeah, what was gas? That was think as a service. Um it was not compute. It was a different word, but I forgot at this moment. But gas provides recurring revenue today. Infrastructure solutions unlock higher margin growth as the AI build out accelerates, which is logical. Gaslit generates immediate cash flow. So it generates immediate cash flow and proves our ability to operate high performance clusters at scale, which is true, but I'm very interested in their actual customers and in terms of contracts they have lined up going into the future as well. Infrastructure solutions may drive higher revenue and margins. So the revenue mix consists of what? Like gas and infrastructure. So a strategic trajectory, not a financial forecast. Okay, well, that's okay, right? I suppose. GPU as a service. Okay, excuse me, there you go. Gas means GPU as a service, which was in front of me the whole time, but that's not a problem. I mean, it's late night, it's Friday, so it's okay. GPU as a service, in terms of their current revenue share, is like the company is right now gas led. So the majority of the revenue that have been multiplying at 64% average QOQ growth has been from the GPU as a service sector, right? Or mix. In the future, Exascale, so the ticker BCAR as a spec, special purpose acquisition, company. In the future, they want to switch their revenue mix to consist of like 45% GPU as a service in purple. And over time, they want to include the gray box of infrastructure solutions as, you know, the majority of their revenue percentage. But I'm interested in what infrastructure solutions are and how they compare to GPU as a service solution, because I would think GPUs are also a part of infrastructure solutions. Um, so yeah, I'm interested what the difference exactly is. Back to BRUN, back to BRUN. 60% for my entry, someone says, okay, which is great. Well, I'm not really interested in how much BRUN is trading at today because, yeah, of course, it's interesting for entry prices, but in terms of valuation of today, I don't think it's close near where it should be valued once the market discovers this gem. Again, I think we are trading in an ascending um, wedge pattern, which is not always bearish. I mean, people tell me that ascending wedge is very bearish inherently, but I think that's just not the case because at the same time it can explode, upward because a wedge means that volatility is compressing. I mean, we had a period of intense volatility when the stock re-rated from $20 to 30 almost overnight in 2 days. And right now we are still very early at the start of the stock when it started trading and it did their IPO at $19. So it's a very young company of just only a couple days. It started trading. I mean, it's not a young company, but it's a young ticker name. So TA doesn't really make sense right now, but I think we'll come there eventually. And I'm gaining a lot of notifications on my TradingView account, so I think that's their news. But let's see what the company actually does. The company, our team. All right, so I just saw something interesting on their investors page. I saw beta, so that means they're building their investing investors relation section of their website out as we speak, which is always interesting. I mean, they could also prepare some new investor decks or new presentations. We don't know, but we'll find out soon in the coming weeks, I suppose. So Andrew Karos is the founder and CEO of Boost Run. He has served as founder and chief executive officer of Boost Run since 2023, where he leads the company's enterprise-grade GPU cloud infra platform serving AI and high-performance computing customers. Prior to founding the company, Mr. Karos served as managing director and head of electronic trading at Galaxy Digital Holdings. Galaxy. Okay, well, let's look what the stock actually did. Galaxy Digital during that time, which I'm interested in. I mean, it doesn't say a lot, right? But it's still an interesting information point. I mean, what even is this ticker, Galaxy Digital? I think it was a okay, so it's a finance company, investment bank broker. Because I also know of digital gaming. Or no, it was Galaxy Gaming, right? Yeah, Galaxy Gaming. Well, that's a different company. Yeah. Well, thankfully it didn't work here because okay, that's great. Um yeah, so they say from 2020 to 2023. I mean, not bad, but also well, I don't know what happened here, but that's just crazy. It went from 50 cents to $34 in like 1 year. I suppose it was shorted and went up like GameStop did. I have no clue, honestly. Galaxy Digital, yeah. I have no idea what they did or what they even do. It's a brokerage firm. They launched their tokennet with excellent partnership, bringing institutional grade standards to digital asset lending. Okay, whatever they're doing, what they do, so that's okay. Market cap is 11 billion. At the time when the CEO left, the market cap was a billion, short of a billion, 10 times lower. Let's see. I think my stream just stopped, but 1 second. I'm gonna share my screen again. Okay. So I'm sharing my screen again. It's all right. From 2020 to 23, where the CEO of Boost Run, Andrew Karras, I'm continuing reading. He was a member of the executive committee. Galaxy Digital acquired Blue Fire Capital, the quantitative trading firm Mascaras co-founded and led as owner and CEO. Built a sophisticated algorithm trading operation that utilized over 500 million in credit facilities for high frequency trading strategies across multiple asset classes. Okay, so this is very interesting right here because they say at their high frequency trading operating arm, where they utilize multiple strategies across multiple asset classes with global infrastructure spanning 6 countries and 13 top tier data centers, there is this aspect of data center at play because at high frequency trading companies, they utilize data centers because data is the most important tool. The faster you are, the more money you can make because you have an advantage in time over your competitors, right? So Wall Street, their best high frequency trading firms, they literally build their data centers or like servers next to the trading exchanges where the data is actually originating from because they do not want to lose milliseconds, which is very interesting. There is this aspect of high frequency trading that's linked to data centers. So there is a history to this sector already, right? So that's very interesting, in my opinion. Algo trade and infrastructure development. So the track record encompasses successful company formation, capital deployment, risk management, and strategic exits in both traditional and emerging technology sectors. Okay, well, the partners of Boost Run are NVIDIA, Dell, Lenovo, and Lumen, and some other companies. And that's pretty much everything that I found on the Who Are We page. Now, I'm also interested in reading about their NVIDIA exemplar cloud status, which was granted by NVIDIA. NVIDIA says their exemplar cloud page tells us a story about setting a new bar for AI workload performance across clouds. So I think that their exemplar cloud status is only designated at cloud players, of course, logical, seeks to improve performance per TCO for our cloud providers with hardware and software recipes, references, tools, and capabilities that solve infra challenges across key metrics. The initiative leverages NVIDIA performance benchmarking recipes to establish standardized benchmarks for AI workload performance across the cloud provider ecosystem. This ensures consistent, high quality GPU performance for end users, helping to drive consumption, improve marketability, and strengthen NVIDIA relations with cloud providers. So, the benefits of AI workload performance are actually helps customers align with transparent and standardized benchmarking, can work together with NVIDIA to assess workload performance. Okay, well, who are the partners running the Exemplar Cloud service, right? Exemplar Cloud provides providers have collaborated with NVIDIA to optimize their infrastructure to ensure the customers' workloads will be performance, secure, and reliable based on real world workload and TCO metrics. Um, they are Nebius, Oracle Cloud, Falter, CoreWeave, Lambda, Azure, and Boost Run. So that's interesting. That's very interesting. Now, let's go and look at some investor decks if they have them. BRUN. So Boost Runs Inc. common stock began trading on Nasdaq marked on May 11th under the ticker symbol BRUN. Regulation, disclosure channels, filings made with the US SEC, EDGAR, press releases distributed to newswire sources. All right, so that's just a disclosure, very logical. The company overview, what are we analyzing today? Boostron is an NVIDIA cloud partner that has also achieved NVIDIA Exemplar Cloud status on the NVIDIA Blackwell architecture, their latest architecture, which is very promising, right? The Boostron platform provides GPU compute, CPU nodes, managed Kubernetes orchestration, and shared storage through an intuitive management console and a robust API layer, enabling organizations to provision and scale resources across thousands of nodes in minutes. Enterprises rely on Boost Run to power their most demanding AI workloads with the performance, security, and reliability their operations require. So Boost Run maintains SOC 2 Type 2, HIPAA, ISO 27001, 27701 certs at operator level, and partners with data center facilities that uphold equivalent security and compliance standards. So the stock is listed on the Nasdaq Stock Exchange, QSIP 09940T100, merger close May 8, 26, board of directors, some independent directors, CEO, and the founder and CEO, and some more directors. Yeah, interesting. Galaxy Holding. Interesting. They have a chief financial officer, which was specialized in M&A transactions, financial planning and analysis, mergers, acquisitions, structured finance, debt capital markets, um, which is just general, general requirements. So that's nothing special. Compensation committee. So the CEO, chief OO, chief operating officer, and Brian Burke. Who's Brian Burke? Let's see. Independent chief investment officer, where he evaluates new investment opportunities and manages a portfolio of private investments, publicly traded securities, and operating businesses. Okay, well, that's interesting. So they're all ex Blue Fire Capital people, a proprietary trading firm and global liquidity provider specializing in cryptocurrencies, which is interesting. I mean, they're all ex crypto people. I suppose like other data center, management teams, maybe because they understand how much data centers mean in this whole AI transition thematic trade. So they began the trading with 940 million of contracted customer revenue, while only being worth, that's the market cap, today 500 million, which is interesting. So let's look at some like real analysis. Boost Run investor slide from September 25, estimating 275 million ARR exiting 26. They now expect 375 million ARR, annual recurring revenue, a 36 increase from their own expectations from their investor slides from September 25. So that's very interesting. I mean, that means that their projected annualized revenue run rate by quarter, their expected capital deployment, rate has even been lowballed by them, which means that I think their adjusted EBITDA and free cash flow has also been re-rated to the upside by real numbers, which they booked, which have increased in terms of their own expectations. The new class will improve over time. So the fact that they have even surpassed their own expectations by 36% means a lot to me, because what that signals is that this trend can continue into the future. If they surpass their own revenue expectations right now, they can also surpass them of today. I mean, they project that they will hit the revenue numbers and translate the contract value into real booked revenues. And who says that they cannot do it? And who says that they cannot surpass their own projections into 27, 28 again? So that's very plausible, and which would be very nice for the company. Somebody says B-Run with some absolute crazy relative strength the whole week. It's actually still very undervalued compared to its peers. I'm not even sure how to assign a price target. No real top with potential for 100, even for $100. Well, I heard projections going into like the next 10x play even. So I will also not project a number, a price target onto B-Run, onto Boost Run stock. So I'm just laying back and analyzing, the company based on some posts on X. Somebody is telling that Jesus B-Run is going to $500, which is very interesting. Biggest partner is one of Trump's favorite stocks, which I don't know what ticker is. Let's follow this account. He posts a lot on B-Run. You guys think the 1.4 billion capacity expansion agreement between Dell and WeLack signals something big coming? Yeah, WeLack was an old ticker, not WeCar. WeCar was Excel Labs and Boost Run was WeLack is now B Run. It's going to $500. I mean, yeah, it's possible. Why not? 500 would be like what 15x. But if B-Run can hit 500, why wouldn't it be able to hit like 1500 in a couple years time when the company keeps expanding and growing their contract sizes, right? And this was the most interesting aspect. The whole market was red today, as we see, except the space sector and some tickers. But overall, the whole market was red. And I mean, really red. I mean, CVV was down like tremendously. Damn, that's actually brutal. It gap down. I don't think it deserves a gap down. Okay, well, it looks like they posted their earnings today. CVD equipment, Q1, revenue of 1.8, 8% margin. Well, the backlog of 4.7 million. Books are weak due to geopolitical risk and lower US funding. University funding. Management will target aerospace, defense, industrial SIC, and emerging nuclear energy markets. Yeah, well, that's unfortunate for the company. Sort of like sell the news event. I mean, it's still up from $3 as they divested their old company, but this what is. Now B run. Let's look at the ticker next. Okay, let's translate this because I'm interested in seeing. It's been added to the board. I published its review months ago. If everyone remembers, I bought a small amount naturally since I didn't have much cash on hand. Okay, well, a small amount can still amount to great capital in a few years. Yeah, that's right. I mean, volume increasing as the stock goes higher, signs of panic buying. Let's go back to B run only, to be honest. And I think, I mean, it has the potential to become sort of like a stock that people begin to love and really become fans about it. It has that potential. So let's open the volume. Actually, we're gonna deselect the TTM and the revenue growth and just look at the volume of B run. The volume is increasing. Well, I wouldn't say that the volume is only increasing when the price is increasing. These two candles, these hourly candles, were clearly funds buying. This candle looks like panic buying indeed, but also it looks like it's trying to break out from its consolidative pattern. Just like here, it tried to break out and it did actually break out. But I would say it's just too less data to analyze the stock, right? So Biron was performing very well on a weak market day. One to watch. Listed on the Nasdaq 4 days ago. GPU cloud infra renting Nvidia compute. Wait, Biron was listed 4 days ago? No way. It may. Yeah, like 1 week ago, not 4 days. But all right. I think that's just a copy paste account. Something. Yeah. Okay. Someone said, I remember we are very patient. 80 is my next full port. Yeah, whatever. He is saying actually, with photonics and semis all ripping, I do not understand why B-Run is not at the center of attention. Few are part of NVIDIA Example Cloud status. It is OnePlus CoreWave, Nebius, Oracle, Microsoft. Those others are all sitting at minimum 56 billion. What am I missing? First off, execution risk, contract sizes, revenue size. I mean, it misses a lot of things, but I mean, they're definitely not the same as Nebius today. But yeah, yeah, that's so funny. Sometimes, you just have to take the leap and go for it. At $10, I was like, yeah, this is a good entry. He's talking about BRUN, Boost Run, the company, the ticker BRUN on NASDAQ. And I'll put in when I get home, and then kids and whatnot forgot entirely, them. Yeah, that's funny. I wonder if you looked at Boost Run at all. Boost Run seems interesting to me. Now, somebody ran a comparison valuation on 10 publicly traded AI infra operators. The names included B-Run. Amazing. Okay, so the comp set isn't perfect, mixes new clouds with Bitcoin miners, pivoting into HPC and AI hosting, but it provides a useful market based benchmark. Financials are calendarized to CY 2026E, so the comps are more apples to apples. Here's what he found. Nebius. Overlap months, overlap months. Well, very interesting. Very interesting. Shares outstanding 72. What does this mean? Why is it in red? Why are the shares outstanding in red? Whatever. Net debt. Some companies have negative net debt. Okay. The enterprise value is 1.8 for 10. Like, these numbers are so weird. Boost Run. Again, these red numbers from 25, 26. Yeah. Revenue growth. Boost Run. Crazy revenue growth in 23, 24. I think that, Excel Labs has even higher revenue growth percentage than Boost Run. But yeah, Boost Run still outperforms the median and mean. Here, Boost Run outperforms it. Boost Run outperforms and outperforms. So Boost Run leads 2026 at 569 of a tiny base, which is interesting. Margins are where the thesis eventually lives. The adjusted EBITDA margin in 2026 comes in at 40% median and 41.5% mean. In 27, that expands to 62.5% median and 57.3% mean. B-Run leads at 66% in 2026 and 72% in 27E. That's really interesting. Margins are driven by where each name is in their HPC build-out curve and the cost structure underneath it, owned versus co-located capacity, power contracts, hosting versus self-operated mix, obviously. Now, Boostron again, like dominates, the margins. That's amazing. Trading multiples, Boostron. So based on today's prices, Boostron is neither expensive, neither cheap. Based on future prices, on 27 prices, Boostron is actually cheap. Um, yeah, I mean, Boost Run is okay. In this comp table, wish I had more Buran. I wish they opened the option chain up to high strikes. Honestly, easy. The AI bull has another year in it. Well, I actually think that Boost Run is another beast. I mean, 100 is just a 3x from here, which is nothing. If people realize that Boost Run is stuck like Nebius, it can easily, go to 300. So, what does he say? Boost Run is essentially just plugged into the existing customer relationships of CDW Corp overnight. Interesting. Very interesting. So this person, he posts really good research. So let's follow him. Look at what the CEO of CDW had to say about BRUN in the recent conference call. BRUN is being embedded into CDW full stack and end-to-end models. Mhm. So let's read what the CEO had to say. The hard part of AI is not the model, it's the orchestration. Value shifts from access to execution quality, depth, and comprehensive end-to-end solutions. To address this constraint, we have finalized a relationship with provider Boostron to deliver our customers access to high-performance AI infra. Okay, when paired with CDW's advisory services, implementing accelerated compute is not the only way customers are operationalizing AI. AI is increasingly being embedded directly into the tech stack across end user and collaboration platforms, networking, as customers embed AI operating. Well, that's actually interesting. I'm going to read some things more, and yeah, I want to thank you guys for the stream, and I'm going to do my DD. So thank you for watching all.